Hey guys, what's good? This is Andre and today I want to go over a couple of stock picks with you guys and just have a bit of a go at some technical analysis. I'm gonna start with some of your guys' requests. Please remember that if you want your stock to be broken down, you can leave it in the comment section below and I'm gonna do my best to get to it in a timely manner. Now guys, I'm gonna start out with the S&P 500 here, which has been bumping heads against this 4170-ish range for the past few days to even a couple of weeks here. Honestly, I don't really see how we can break above without a pretty serious catalyst after spending so much time here. If you try to look at the chart, it kind of looks like we've been flagging, but what happens when you're flagging for too long of a period? Usually I like the flags not to be longer than roughly a couple of weeks tops, but when you're flagging for such a long time, what usually tends to happen is a break to the downside. Now, something interesting that I sometimes use with these types of analysis is an anchored VWAP. Now guys, as you can see, the anchored VWAP basically tells us where the average volume weighted price would be ever since a certain period in time. And if we take into consideration the lows that we've set in October 13th here, as you guys can see, these guys have kept buying and buying and buying, and it's starting to creep up. But what I think is gonna happen here is that as soon as we break below it, we're gonna see a lot of selling pressure. So I would probably say that as long as we manage to somehow stay above the anchored VWAP here, we're gonna be in good territory and we're not potentially going to be making a new low. I think that if we manage to break below it, we're probably gonna see a lot more selling pressure piling on, and we're probably gonna see new lows. Now, I'm not longing this market by any means. I think there's just too many unknowns right now, too much volatility. I'm not shorting it either, honestly. I think it's just in a bit of a consolidation phase. I would not know what to do with it. I think the best you can do is kind of try to draw a triangle like this, because volume kind of confirms it. It's not 100%. If we break to the upside, that's fantastic. If not, again, I don't really know what to do with it, if I'm being completely honest with you guys. Have a look at the flag and maybe make sure that if that channel is broken to the upside or to the downside, you at least know about it, but I wouldn't trade this, that's for sure. I'm gonna start with a couple of other ticker symbols here that I really wanted to showcase for you guys. I actually came across LOV here because I was looking for LUV and had a typo in. And I thought it was really interesting. I wanted to show you guys two stocks that are severely beaten down, that look a lot different from one another, and I'm gonna tell you guys which one of them I like the most. But basically what I'm looking at here with LUV, which is Southwest Airlines, is the fact that it keeps getting beaten down and keeps going down. Every single time it reaches the 200-day moving average, it goes down for another leg lower. Now, what I think is really interesting is that as of recent, it's not forming any sort of a pattern here. It's made 52-week lows, probably a bit further back than 52 weeks. There's just nothing that you can grab onto and say, okay, this stock is beginning to look a bit healthier, a bit better. And I know a lot of people kind of want to get in early on a stock and kind of have the question of, can we buy now? Is it a time to buy now? Can we buy here? Can we buy kind of here? Do we buy here? And unless there's a pattern, something telling you that you should start adding into a stock, or maybe you don't want to take kind of a swing trade position but an investor role in this, I think it makes sense to wait for the chart to indicate some sort of more stability, a better price action. And actually with LOV, I think that's an interesting one, because as you guys can see, we had this really steep trend line here that we broke above. So this was an interesting development, and ever since we've been forming this triangle. Now, this is not a recommendation to buy or sell anything. I actually don't know what LOV is, and I don't know anything about them, so I couldn't recommend doing anything with them. But I just wanted to reference two charts that are very similar in that both of those charts are extremely beaten down, but one of them looks a lot better than the other from a pure price perspective. As you guys can see, we've been forming this triangle. Now the triangle in itself is indeed a reversal pattern formation. If for instance we manage to break above the triangle, somehow retest it, then this could potentially become a really interesting place to add to a position or to take a trade, to try a quick 2-to-1 or 3-to-1 on this stock. Now again, I know nothing about this stock, so I could not recommend doing anything, but as I was saying, if you want to have it on your radar for kind of a really quick 2-to-1, I think you can take it. You can have the stop loss immediately below the apex of the triangle, have the take profit be a 2 or 3-to-1. You don't need to go crazy with it. We're not trying to become legends. We're simply trying to be consistent and take consistent profits. So this is the major difference between a stock that's beaten down but starts to look better and one that's just beaten down and period. There's nothing bullish about that setup. Cool guys, on to the next one. Before I do though, I want to take a quick breather here. If you want to see our stock picks and see our trade ideas, we post a bunch of them every single week, a lot of really good risk to reward ratio trades that could definitely help you guys improve your trading. Feel free to head on over to Patreon. You not only get that, but a ton of premium content as well. For just $5 a month, you can help support the channel and get access to all of that as well. Cool. So the next couple of stocks that I want to cover here, well, actually the first one is CRM. CRM is a really beautiful, interesting one because as you guys can see, we have had this really intense move to the upside. Now, it's never a good idea to buy after such an intense move. However, it's really cool to see that after some consolidation here, the stock was able to break above and not only do that, but also retest from above, which is really encouraging. As you guys can see, we first broke above and then retested this area over here. So again, as per usual for the channel and for these types of trades, it's really easy to take a quick long position here, guys. We have an extremely short stop loss target, so we're gonna stop loss as soon as let's say we give ourselves a bit of room for error in case it spikes lower to grab liquidity. But even so, we're gonna have what looks like roughly $4 worth of risk or $5 worth of risk for what can probably be, let's see here, I would probably say $18, I would dare say, worth of profit. So that's a 3-to-1 risk reward ratio or 3.3-to-1 risk reward ratio. So that's what you guys need to focus on. Now the second one, and or actually the last trade or the last setup that I want to show you guys is on Suncor Energy here, ticker symbol SU. Again, a pretty sweet setup here. We are right against the trend line and we can take a very easy trade here with a very tight stop loss just beneath previous lows. It's gonna give us what, let's say you give yourself kind of 60 cents worth of risk, and you probably can have, let's say, the 200-day moving average as a potential target here at $32. So that's roughly $4 for 60 cents. That's a 6-to-1 risk reward ratio. I think this is the best trade that we've shown here for a long while, guys. That's it for today. Like, subscribe if you enjoyed the content. I'll catch you guys next time. Take care.